Okay, so we are recording this one right now. All right, so this week is a non-farm payrolls week, which means as normally the expectations are due to the following plan. The beginning of the week to be quiet, especially today when the UK central bank is off. And by the end of the week, when the end of the month comes and the beginning of the new month comes, we would expect things to wake up a bit more. Um, so it's good for us because actually we can easily, quietly set our plans for the pairs, set the direction, what's acceptable for long, what's acceptable for short, and what is acceptable for both, right? Which are the pairs that both directions are tradable and why. As always, Monday is the longest session because we plan the week in advance. And then during the week, we follow up. We trade our setups, we trade our directions, and update accordingly. If validation or invalidation plans came into play. Okay, so patience, focus, and take your notes, guys. Okay, yes, everything is coming in the report for you, but please take your notes, put your own little things there to make it easier for you to remember and to follow up, as this is the most important session of the week, because we set up everything for the entire week to come. By the way, just updating again, tomorrow, due to some personal family things, I will not be around the whole day, and there will be no session with myself. But tomorrow there will be a session with Jordan, going over all the setups we have and the systems we trade. Okay, so just wanted you guys to know. So, are you ready? Okay, let's start. Then let's go with the majors and slowly drop lower to the crosses. The euro dollar. Our last week plan was bullish. It was bearish as long as we are below the trading channel. We wanted to see the move down. We expected to see the move down. But that was what we wanted to see. If you remember, guys, we wanted to see this push, and then we wanted it to be false break and break below, which did not happen. So our plan came to be irrelevant, not tradable. So no shorts were taken, no shorts were activated, validated. Once again, this is what I just want to explain here, how important it is to have your plan and follow it. Because if you know your direction you want to trade, that might be wrong, right? Like with the euro dollar, the direction that was chosen according to the cycle was wrong. But once you have your direction, you are not exposed to all these kind of noises that we had the majority of the week, and you know exactly what you want to see. And you want to see breakout or lower lows to be regained before you start to enter and trade your positions. And the worst case to happen in such scenarios is what? You just don't trade, right? So if you're wrong with your plan and it doesn't follow, you just don't trade it. And that's the importance of it. Why? Because you cannot even imagine, guys, how many messages I got the last week about the euro dollar all this period. So is it long? Is it short? Is it short? Is it long? MACD up, MACD down, divergence there, divergence not there, false break, lower lows, spikes, empty candles, blah 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 blah. Whatever it is, the euro dollar is the most tradable pair. You know that. Everyone wants to have his or her piece of that. but that's why I just wanted to show when it's tradable and when it's not. And as long as you have your plan, guys, it's much, much, much easier to follow. No one, including myself, guarantee that your plan would be the right plan, but it is your plan. And the worst case in such scenarios is it's just not tradable. And that's what happened with the euro dollar. We could not trade the shorts, and now after the break of the range and regaining new highs, gaining the convergence out of the range, this pair, there is a good chance we are climbing slowly but steady towards the 121 area, which again could be a bit below, a bit higher even, or even to the 124, 125. And here I want to be very clear. If the bulls would be able to take this pair to 124, 125, we're going to get probably the best short opportunity during 2017, which may last through 2018 as well. Now here is why. This is the double cycle we've had on the monthly chart. According to double cycles rules, the target for the correction should be 38.2. 38.2 stands for 125 zone. And I say zone because it's never an exact level. It could be a bit higher, it could be a bit lower. Everything inside the range is acceptable. And I just want to remind you guys, what is the range? 10% deviation. 10% up and down from this entire move. So if this move is, let's say, 2000 pips, so it's 200 pips up, 200 pips down. This is how you create yourself a range with deviation. Accept deviation to look, to reach, and to trade. So according to that, it's still bullish, which means for us, while we broke the range, and as long as we don't have new scenarios of lower lows, the pair remains bullish, and our targets accordingly around 121 zone, and then 124, 125. By the way, why is the 121? Where this where this number at all comes from? From here. If this is a special cycle turning, that's what we get. 1, 2, 3, triple duplication, and that might be our final push, and that takes us to 121. Plus, it has a very powerful resistance area right here on the weekly chart. And very interesting part is there is a continuing divergence to develop. We know that for continuing divergences, they become ultra powerful when they have 4 dropping highs. We have 1, 2, probably 3, and 4 to be created on the coming weeks. So for us, as for now, the plan is only buy, and our invalidation would be if we start to get lower lows. The current low that holds it is right here, and I believe that as closer we climb to the 121 area, the pair will start to create this kind of slowdown for us. So highs, false breaks, another highs, false breaks, and so on. Okay, like slowing down around the station, like a train does, right? When a train arrives to the station, it starts to slow down before it enters it officially. And that's basically what is happening here. A few weeks ago, we have been talking about 117, 118 to slow down, and it started to happen the same way. You see that here was slowing down, slowing down, slowing down, and then slow down, stopped, ranged before the chosen direction happened on Friday after the speech of the leaders. Okay, so summarizing, we are long here, we are aiming the 121 and maybe even straight forward to 124, 125. I'm a bit doubtful about that. As for now, But as long as we don't have two false breaks and lower lows, or as long as we don't have triple cycle down, double cycle up correction, we are on questions, guys. Any question about this pair or about any of the technical setups? Please do it now. I see some new names here, guys. Good to see you. Thank you for joining. And in the tour video, you can understand exactly what we're doing here, how it works. Okay, so if you have any question, of course, don't hesitate to contact us. All right, cool. So if there's no question about the euro dollar, let's continue and let's talk about the pound dollar, which we said we switch to bullish if we get convergences, and it seems we start to have one right here. Now this is not a classical one for that reason. Between this low to this low where the false break occurs, there is no divergence, which means this is pretty weak. And if we go and compare the previous low, this one, then we figure out what? That there is no low, right? Because this last two candles high was never broken. So rely on that as a convergence is not the smartest thing to do, but we have for that scenario number two. In our scenario number two is to get triple cycle up, 1, 2, 3, to get double cycle down, and to get it broken. And once it does, we can start looking for the buys. So for the pound dollar, the scenario is like that. First of all, we wanted the pair to reach 128, 127 zone, which it did. Right? The reason we wanted to see this zone was of this triple cycle. Now, by ideal, it would kiss the 126, but it did not. At least as for now, it did not. We do have a bullish hidden divergence here, and this hidden divergence switches slowly to kind of continuing here. Not the best one, but technically correct one. And on the 4-hour chart, we got this cycle to the downside, which is now reflected by the first leg to the upside. And that's why we can say, as long as this low holds, we are after buys. And the best way to look for these buys for us would be to do, we get this triple or special. We need to get two waves down to the correction, and we get a breakout. Okay? The other alternative scenario that could happen is that after this triple, we don't have double cycle correction, but we get a range. That's also an acceptable scenario, and as you guys know, or don't know and will know, as more you attend here, there are only two ways that cycle could get corrected. And these two ways are double cycle, which is called also ABCD, or 1, 2, 3, 4, or alpha, beta, gamma, delta, and so on. It doesn't matter how you trade that, how you name it, sorry, it matters how you trade that. And the second way for corrective cycle is a range. That's all. There are no more ways. Impossible. There are no more ways exist in the technical world. Okay, so that's what we have here. After this current triple cycle or special cycle developing, by the way, who can remind me what's the difference between triple or special? This is triple, and what is special is when the middle one is twice longer or shorter than the first one or the last one. That's all. That's the whole difference. Everything else remains the same idea. They belong to the same family of three waves, three pushes, three legs, call it whatever you want, cycles. That's all. That's the whole difference here. Okay, so two waves down, breakout, and we can start looking for our buys. That will be our direction for the pound dollar. Our target, due to the bullish hidden divergence, Our target always remains the last high, in that case here. And I still want to remind you, for long run, we have the gap from Brexit, right here, June 2016. We all remember this crazy period, right? We have the data from there, and we have a gap from there still to be closed. Okay, now what's our invalidation for the pound dollar for that case? By the way, on the 1 hour chart, you can look on this triple cycle or special cycle much clearer, right? The only way to invalidate our longs would be the break below this low, because if it does break below this low, we are going for a bigger double cycle correction to the 126 zone. Okay, and that's why we don't attack right away. We need this double cycle correction, we need the breakout, and we start to build up our long positions. If we don't get that, we do not get involved with any journey. Questions about the pound dollar? Oh, no. I use Boris. I use cycles principles, and you can learn everything about that in the media zone videos. Cycles part 1, cycles part 2, cycles part 3. Okay. Elliott waves is well, one of the greatest theories, but it's very individual. So everyone can count something a bit different. While cycles are much more strict and basic. Elliott waves could be part of the cycle. Because if just for example, if we have a double cycle, which is coming from the option expiration world, then this leg could be 5 waves. This one could be complex or whatever the name is, and so on. So inside that, you can break down inside it of very low and combine the Elliott waves. Of course, there are a lot of guys in the club combining cycles with Elliott waves, but the approach is different. All right, so that's about the pound dollar. Let's continue, guys. The next one we have on the list is the combo of these two. That's the euro versus the pound. And our view remains bullish. We're still aiming higher, above 0.93, closer to 0.94, 0.95. Every figure number here would be in play. I just want to remind you guys where it all comes from. It all comes from these huge long-term expirations. We have it right here. That's 0.94, 0.95. And based on the weekly cycles, take a look where we get it. Okay, well, this is going to be our massive zone to start looking for yourselves. We remain bullish here despite the divergence, despite everything on earth, as long as we do not have the scenario of 2 false breaks, so 1, 2, and lower lows. As long as it did not happen, we cannot look for shorts. And the second way for that is that we get 1, 2, 3 as explained before, and 1, 2 correction or a range, right? And that's all. And then we will be looking for breakout of the last trend line and sell. So we need 3 waves down. That's the alternative scenario, right? And then one of the 2 options: double wave correction, breakout, or 3 waves down and range, and then a breakout of the last trend line to be a variable there, and we are back to shorts. As long as none of these scenarios happen, we do not have our invalidation, and that means our long remains on. Questions? All right. The next one, we continue with the euro pairs, and that's the euro New Zealandian. Now here I want your focus, guys. As we switched, this is another example for when do we switch from short plan to long plan. Take a look what happened here. That was the previous week. We got two false breaks. We got a convergence. We wanted to see these two waves retrace and breakout for sales. Breakout never happened. And therefore, with the break above this high, we continue for bigger cycle, right? And that's what those of you who have been here in the previous week experienced. Now, how long do we go here? We got a triple cycle on the weekly chart before, which we have right here. 1, 2, 3. And that's the double cycle correction. It's taking us to the 50%. And here comes the very interesting part. The pair is creating for us a potential. And I say potential because it's in creation yet. Bearish divergence. This is continuing type divergence, which this is a regular type of divergence, which we call PNP, positive, negative, positive. It's going and forming itself around a 50% on a daily chart. Believe it or not, and you have to believe it. 1, 2, 3. This leg is ending up with triple cycle and a bearish potential divergence forming as well, which means we are coming to a critical zone, which most likely will start to slow down. Remember the metaphor with the train? We're coming closer to the station and the speed drops lower, slowly until the full stop. And then after regaining the momentum, it continues. Same here. We do expect a slowdown, but currently the momentum remains bullish, and our invalidation would be exactly the same as with the euro dollar and the euro pound and basically all the euros. We need two false breaks and lower lows. Since we already had false breaks, one false break here could be in play as well. So what we need here is false break and lower lows, at least one. Or what's our alternative, guys? 1, 2, 3, 1, 2, or a range. And then breakout of the latest trend line. Then, and only then, we switch to the bearish direction. As long as it did not happen, we are for buys. Okay? Now, if we take a look also on the dates here, that's crystal ball numbers here. We can see that end of the month, 29, is a day to pay attention to. But if we don't respect that, right? It could be a day before, day after as well. We are going all the way through until the beginning of the next month, and be more specific, something like 5th or 8th. So if this scenario does not happen these coming days of the two false breaks and convergence, right, or at least one with convergence, then we move higher, and our higher is all the way to here. The levels we have been talking about before, they are also recognized by the crystal ball. So that's for the euro kiwi, which we switched long from the previous week, and it's all still remain in play. Next one, Aussie versus the franc. We have been talking about shorts previous week, and our shorts remains on. We got the move down. It's approximately 100 pips lower. Very slow, but kind of very stable on the same time. We do respect the trend line yet. There is only one problem I have with this one. It refuses to recreate lower lows. That's a bit of warning sign, and here is why. For the long term, we want only for buys according to the monthly and weekly cycles. But that's for very long term. Short term, we had this triple cycle, which could be also recognized as double. And here is the thing. This could be our final destination for the shorts. But we are already having some kind of problems on the 38.2 with a potential bullish divergence developing. And I say potential because MACD does not tick up yet. And as long as it did not, it means the divergence is just creating. Right? So as for this pair, we remain bearish, but we have with this target in play, right? Final target in play. But for those of you who are in their shorts, it would not be bad idea to 1. Cash out your partials. 2. Make sure you don't lose your trade by moving to break even. And 3. Make an invalidation. An invalidation would be the break above the trend line and the creation of higher highs. If we start to see that, most likely the game for shorts is over. Until then, and as long as it didn't happen, the pressure on the very short term remains bearish. We would expect a revisit of the 38.2 and maybe even the 50%. Questions? Classical. Next one, dollar franc. Now this pair from the previous week, we are after buys on the long term. But take a look what happened here on the short. We have been trading long previous week when it was holding above this area. Okay, we got this chance actually here to the upside. It was 100 points to the upside, and then boom, all changed, especially on Friday. Now, why at all the franc is getting stronger versus some of the pairs? The reason is pretty simple fundamentally. The leaders of the central bank say that it's not likely that the rate would remain so negative for so long. That immediately was enough. It's like the tweets of Mr. Trump. Such things are enough to boost up the bulls of any currency. And Swiss historically was considered as a safe haven to many traders and investors. And accordingly, the bulls woke up and say, thank you, finally, the reason to go long. Even though the negative rates and negative swap, investors still don't count the small money. They are looking only for big, and then change the direction. But for the very long term, my view here, exactly like for all the francs, is that it will find the bottom and it will boost up again for a longer run to provide this, well, deeper correction. Now, a possible target for that would be again around the 111 zone right here. And for that to happen, we are exactly looking for the buy opportunities for the long term. On the short term, the game become a bit simpler. Let me just remove that. The game become a bit simpler. We have here several levels, especially after we get a false break here, a false break here. We are in play of a range. We do have here also a situation which we don't love to see normally. And this situation is this one big candle. all this move is stuck inside, which make it a bit ugly, right? Let's admit it. But currently, look what the pair is creating for us. One, how do we name that, guys? Triple. It could switch to special cycle, right? But our view was and remains looking for long-term buys. And here comes the update since the last week. We have this 161.8 respected. If it switches to deeper special cycle, there is a good chance we are going to the 091 zone. 092, 091. And for that, and especially after breaking the last week lows here, we switch now not only for buys but also for shorts, and this is one of these pairs that would be acceptable for both directions, because on the short-term cycle we have this one to be corrected, and we have a range still in the play. So technically, this pair can do all that on the short term as well, maybe even to push to the 50. And on the same time, the long term cycle, the weekly one we saw, could go and get us to the full expansion around 092, 091. And this is exactly the reason why, on such conditions, when the long term cycle and the short term cycles do not match, both directions are acceptable. And now, after breaking below this low on the previous Friday, it even becomes more relevant. So our direction for dollar franc would be both setups acceptable, for short and for long. And how do we trade that? With the systems we have. It could be any of them. Any of them that will give us legal call, SRS, Triple B, Crystal Ball, Libra Code, Gemini, the divergence trading, and so on. Every system that gives us correctly ready setup is considered to be an opportunity to trade. Okay, so dollar franc, our chosen call here is both short and long. Questions? Okay, next one. Pound franc. We are now in the franc, so let's continue and cover them all. Pound franc so far holding its range, holding its support, holding the level, holding the double cycle it has for us right here, which will be well seen on the 4-hour chart as it's part of the daily range. This is the one I refer to, of course. And the pound franc starts to build for us false breaks scenarios. So what we want to see here is a break above this high, and then we switch looking for longs. Okay, for me this pair was and remains only for buys from previous week, and it continues with this week as well. Our first target here would be at least the 38.2 of the double cycle, which is approximately 200 points to the upside. So once we break above this high, every retrace is for us opportunity to start looking for the buy direction. So this one becomes very simple. We started our follow-up from previous week, and it's basically an update. Just want quickly to remind where this whole idea for longs come from this double cycle, and which could take us towards 38.2 up to 50 if we count that as bigger triple. Okay, could that pair not follow our plan here and break below this area, the answer is technically yes. It will not change my plan because I still want only buys. We have two levels we have to respect. One of them is 61.8, which is currently happening. One of them is slightly lower, around the 120, 121. So if we break through this current zone without providing us the long we want to see, I would stay neutral and look for buys from here. And the reason for that is, again, the very, very long-term cycles, which for me remain only as a reason for buys. Okay, so that's about the pound franc. Let's continue, guys. Where is my next one? Swiss yen. Now, we started a follow-up on this pair from the previous week, and we said clearly, as long as we don't have two false breaks and convergence, we cannot look for longs. We got these two false breaks and convergence right here. Therefore, as long as this low holds, every drop down in two ways, and for us, we are after buys. As per targets for such, we got this special cycle to the downside, which means we are good to go all the way to 38.2 up to 50. Okay, to look for these longs, and there is still a very, very good chance that we are going for the next level of this cycle. 61.8 was respected. There is a good chance we will be starting climbing up towards the next one, which would be 121. So for us, as long as this low hold and this divergence is still in play, we would be looking for buys continuation. Okay, so that's for the Swiss yen. Any questions? We started this follow-up on the previous week, and we'll continue on this one. By the way, currently the way it looks like, we might get this, right? Special cycle, double cycle correction, continuation. So that's why I say every two waves down for us is a great opportunity to start looking for the buys. Let's continue, guys. Pound Canadian. Our previous week call was we remain bearish as long as we don't have convergences after two false breaks. Do we have any convergence here? No. Do we have any convergence here? No. Do we have any two false breaks? No. Therefore, our plan was and remains looking for possible sells, and the only way we are going to invalidate that would be two false breaks with convergence, and then we will be looking only for buy retraces, or triple cycle up, double cycle down. So 1, 2, 3, 1, 2, and breakout. In that case, we also will switch to the buy directions. Do we have any at this stage? The answer is no, we don't. And there is only one false break happening currently here on this very, very small range. And now it becomes in play here with breaking of this high. So that's what makes it legal to start looking for triple, double, and breakout. And then we can switch for the buys. As long as it didn't happen, this pair remains under bearish pressure and could technically go and set even lower lows for us. Why? Because if we expand this cycle of the monthly, technically speaking, this pair could still get even here for us. I know it's very, very, very far, but it's still technically doable. Okay, so here, no need to rush to make any decisions. No need to go and say, oh, now it's amazing buy, oh, now it's amazing sell. We have to have very clear plan for validation and invalidation, and we do. Our invalidation could be only one of the two scenarios. 2 false breaks followed by bullish convergence, or triple move up followed by double move correction and a break. Just a reminder, this one. 1, 2, 3, 1, 2, and breakout. In that case, and in case of the false breaks followed by higher highs, we look to buys. That's the only case for us. Questions? As for the trend line breakout after a double cycle, do you recommend to wait for a candle to close or a breakout with the spike? Technically, spike is enough. Candle to close up above the trend line gives nothing more than extra confirmation. So it's much safer. Yeah, that's a good question, Gord. Always we try to look out for 4-hour chart for the false break. The answer is no. We do that only because weekly cycles are in play. The idea with cycles is very simple. Define your cycle. Let's say this is weekly. And then you can look for your setups for validation or invalidation for short and longs on daily or 4-hour chart. Basically, up to 2 lower time frames. If your cycles come from daily, then you deal with 4-hour and 1-hour. If your cycle are 4-hour chart, then it's 1 hour and 15 minutes, which of course you understand is less reliable. Still tradable, less reliable. So the only reason we are looking at a 4-hour chart is because we are dealing with the weekly cycles and levels here for majority of the pairs. And therefore, we are looking for daily or 4-hour chart to give us our validation or invalidation into play. Also, the fact that we do that gives us better chances to trade because we are not exposed to every single noise. Just imagine you go to the 15-minute chart and try to make your decisions what validates or invalidates the cycles. It's going to be a headache. You will need a lot of Advils next to you. So the best thing to do is to set up the very long-term view, cycles, validation and validation plan, and on the lower time frames with the intraday strategies or the short-term strategies, go and trade it. Okay. All right. So pound CAD we covered. Pound Aussie, same exactly. And the only thing here is that we start to have these false breaks. There is nothing gained yet. We are still stuck in a range. So as far as it looks tempting, we don't yet have our reasons. So we do need higher highs, which was created with a spike, and the safest thing would be here, triple double, right? So for aggressive year mode, we can say that one false break came into play, second false break came into play, higher highs are created with a spike, with a gap, and we can see it's regaining it. So technically, game is over for sells as long as this low holds. Buy it is. Safest way would be get our triple, get our double, and get into the play. Okay. For more aggressive here, we are good with the buys as they are forming right now. Just want to remind you, we had triple cycle, which could be easily translated to the Special cycle as well on the daily chart, bullish divergence in play. That's what make us look for these longs into play. And the way it performs right now with the two false breaks and the momentum gaining, we can say for aggressive mode, this is valid low to say that okay, we are now only for buys. And if we want safer way, we need to get a triple, we need to get a double, and we need to get a breakout. So in our case, our direction now is only for buys. Let's continue, guys. The next pound pair on the list is going to be the pound versus the yen. Same story pretty much. Just want to remind you where it all comes from. First of all, I need to choose the right pair, right? Pound yen. We have this special cycle from the weekly chart. We are going to 38 to up to 50 for the longer run. We do have a bullish hidden divergence here on the weekly chart. We do have this range on the weekly chart. So for us, it's only buys. We want to see only buys forming. Daily chart, we got triple wave down, followed by bullish continuing divergence. 4-hour chart, we are forming a triple cycle. To simplify the things, 1, 2, 3, we would want to see the pullback and the buys. Okay. Now, as per false breaks, we have our second one formed. That was the first one. This is the second one. That's the low. That's the low. Where we get it into play, and we now get this convergence. Now, this convergence is getting us the triple cycle we want. So most likely, that's what comes into play. 1, 2, 3. Somewhere from here, correction or a ranging correction. Remember, it could be double wave or a ranging correction, and we are for buys. So summary, as long as this low holds, our direction is bullish. Okay, that's for pound versus the yen. Is for now. Next one, we have two euro pairs yet to cover. That's the euro versus CAD and the euro versus Aussie. Both are acceptable to trade for both ways. Why? Because euro CAD is trading in a huge range, right? This one is in a huge range. So based on this range, we can climb all the way towards the top, which is 155, 156. If we go to lower time frame a bit, what we have in play here is this triple, 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 and that's where we would expect a potential movement in such view, in such pattern. On a 4-hour chart, this is basically where it comes to play. So we could easily expect the climb towards the next highs. We could easily get it into play here for a range movement as well. So for us, on the short term, both directions are acceptable. For the long term, we still would expect this pair to climb higher. And therefore, we would prefer the buys for the long term. Okay? But for short term, as explained, we are good with both directions. There is all the possibilities and probabilities for us to get this before the continuation. Therefore, this pair joins the dollar franc and one of them, but we accept both directions to be traded by the systems. It could be long, it could be short. They both technically acceptable. Each system with its own rules. And same with the Euro OZ. Now this one is very interesting because again we are in a range. Big fat range. Technically we can climb all the way higher. 155, 160 could be in play. On the lower time frames, however, we do have lower range, right, in play, and we do have this double cycle coming follow us with a potential divergence. Therefore, the move for the long run can still be something like that before we climb higher, and therefore both directions again are acceptable for short-term sells and for the long-term buys. Both directions to be traded, and both would be correct. Okay, so that's for the euro pairs. Now we have few of the. Oh, actually, I forgot the pound New Zealandian, which is also one that we can trade both. Pound New Zealandian for long-term double cycle. We still want the climb towards 2, level of 2, 38.2 Fibonacci retrace. That's our correction for the long term. Therefore, we want long-term buys. On the short term, however, we are now part of the range. So, for us, we could neither get a breakout and continuation, or we could go and make this pattern as well. That's why, on the current view, both directions are tradable with the breakout of the range or with the retrace to the bottom of the range again and then the buys. Both short-term and long-term directions here into play to be used by any of the systems. By the way, guys, from previous week, if you remember, we have been talking about these cycles here, right? We got this one that got us blocked from the 100, and this one that got us blocked from the 100 as well. We got a beautiful bounce from there. It was by the case a triple cycle, and that was a double cycle, and they hold this zone for us, and we are climbing here. So we could, with this cycle, we could get the short-term corrections, and we can get a movement after that to the upside. Both directions for us are tradable clearly, cleanly, correctly. They both will be acceptable. Any questions here, guys? So these pairs, they were all for acceptable both directions. We have few more left for one direction. Let's continue. That's New Zealandian franc, which remains bearish for us. We do expect a movement into this pattern, so we do expect it to drop lower on the weekly cycle. On a daily cycle, bend to bend move, so we would expect some kind of pullbacks, but we do want continuation here. And on the 4-hour chart, as long as we don't have two false breaks and convergence, we are after sells. Every rally into waves is a sell opportunity. The only invalidation for that would be if we get the breakout, false breaks, and convergence complete. Now, since the daily chart here into play as well with this cycle, okay, and we are now on the 161.8, not formed yet, but in a potential for sure. The 1-hour chart comes into play as well. And this is what we get on the 1-hour chart. One false break, second false break. This high to be broken could bring us 1, 2, 3, 1, 2, and then on the very short term, possible retrace. Okay, so if we get the convergence in play, both directions would be acceptable. Both directions would be acceptable. As long as we don't, our direction, our preferred direction, is yet the shorts. Okay, that's for Swiss, New Zealand and Swiss. And we have from previous week Aussie CAD and New Zealandian CAD, the same idea exactly. Nothing changed. The idea remains exactly the same. We want to sell rallies and we expect lower lows. So every 2 waves of correction we get, we want to go short. Our direction for both ACAD and New Zealandian CAD is sell rallies. Okay. Now there are a few. The last one, sorry, I have on the list, and then few that we spoke, and they become to neutral. The last one we have on the list is, where is this one? New Zealandian yen. This pair also moving inside the range, and technically we can easily aim lower based on the range movement. On a daily chart, we start to form continuing divergence. We know that for continuing divergence, many times it goes for triple or quadruple lows. So for us, sell rallies is the plan for the New Zealandian versus the yen. The only invalidation for us would be, again, 2 false breaks with convergence. So this, and then convergence. We currently have the first false break done. And the second invalidation would be, you already should know that, guys, 1, 2, 3, 1, 2, breakout. Right? That would be our only 2 invalidations that we will want to switch from sells to buys. As long as it didn't happen, New Zealand and yen for us is sell rallies. Now, a few more pairs that we had on the list, like previous week, lagging cat franc. This pair we want to see going and holding below the trend line. We want to see that breaking that to give us the okay that bears are ready to take control, and we are basically trading this setup, right? This cycle, sorry. We want to see the correction here towards the 50%. We want to see a breakout of the trend line to give us the okay to go. We had a triple cycle down, 1, 2, 3, 1, 2. This is how it developed. So we want to see the breakout here and hold below, and we are back to bearish versus these stops, which means as long as this stop will hold, we will be looking for the sell. So if we manage to break down, our sell is in play. Okay, so that's for cat franc. And dollar yen, we spoke about this also last week. For me, this is one of the only not readable on the from the yens, and here is why. From one side, we are bouncing from the 61.8. There is a bullish divergence. There is a daily cycle by itself with a bullish divergence, right? From other side, we don't have yet 2 false breaks followed by convergence. And from the third side, this could turn to be at all a longer correction, taking us towards 103. Definitely doable scenario. So for me, dollar yen is everything possible. Shorts and longs are acceptable. But I would be more specific by saying as long as this high holds and we don't close above, for me it remains sell. And there is a good chance we are going to break this low to develop the next level, and that could be around 107, 108, or that could be even all the way to here. So this 107, 108 will be in play, and then 105 would be a play if we actually continue to hold below this level. For me, good chances to see lower lows. I would only note here that this is kind of aggressive trade, aggressive pair. I still remain on the sell view, but with a very, very, very tiny invalidation, and this would be the one. Break and close above it, and I back to neutral. As long as we are below, for aggressive trading, I think the direction is bearish. So, by the way, the reason for that is because we have a bullish divergence from weekly, because we have a bullish divergence from daily, because we have the levels, and nothing happens. No bounce. You see that, guys? No bounce, and that's why such conditions are those conditions that we start to wonder and say, you know what? If there is no momentum, why to force it? Maybe the bulls are not ready yet, right? And this is exactly the case, and that's where the bears could take their control for a continuation. Next pair we had on the list, CAD Yen. Same story. We wanted to break below these two trading two wave correction to break it to the downside, and then we can go and make the our view back to bearish, expecting that to correct the double cycle towards the 38.2. OZN, same story. We started our follow-up from previous week, but take a look what happened. Right? It switched to be what? A range. And now everything is stuck inside one candle. Therefore, OZN become currently untradeable. We have better pairs to follow. Okay? And a reminder of our previous week. Why didn't I have it for today? Weird. I forgot to include that. Let's cover that. Aussie versus the Kiwi, guys. Just a reminder, for long term, we are going to the top of the range, right? That's our direction. We do have this cycle. Our next level for this cycle higher, above 110. So we have 110 first of all to be in play, and the final one would be 113. So our picture for the long term remains only for buys. For short term, with the current cycles developing and this one, the moment we get lower lows, we can go and look for the short term correction. So Aussie Kiwi, long term buys, short term sells if we get the convergence. Okay, as long as we don't have the convergence, and 1 hour chart could be in play here because daily cycle is involved, right? This is our daily cycle, double cycle. We want to see that around 110 happening, but it could happen already here. We want to see lower lows, and then we can look for short-term sell rallies. Okay, great. So that's about the FX part. Now, time to move to commodities, indices, and the CFDs. Gord, maybe NFP will. Well, that's the expectation. Non-farm payroll normally, not always, normally clearing up a bit. But let's make it simple, guys. You can see that there are very clear pairs, and there are those that are not too clear, right? And as I always say, trade with these that are very clear. And your invalidation is very clear. What should happen to trade it, what should happen not to trade it. Right? And that's all. That's the safest way to trade in these conditions. That's it. Basically, that's all. Okay, let's continue, guys. Quick update about the indices. Not much changed for us from last week. We are stuck in the range here. As long as this trend line holds and the resistance zone holds, our view remains looking for sells. That's the S&P. Dow Jones is the same exactly. As long as it does respect the trend line. And that's not the trend line. That's the trend line. As long as it does respect the trend line and respect the resistance zone for us, our view is to look for sells. We have two more. No, actually a few more. One of them is FTSE from UK, and we said from top of this range we are after sells. We are on the top of the range, so we are back to sell directions only as long as this range holds. We have the DAX with the same story. We have the range. We want to sell top of the range. We got the top of the range from previous week, and this would be our preferred direction, selling top of the range. And here basically I would extend it because this is a triple cycle, so it could go and make double cycle correction for us. But as long as we hold tops, sell rallies. Sell rallies. That's for DAX, and same for CAC of France. 40 top companies here. 1, 2, 3. The correction could be ranging like it does right now. Sell rallies or the breakout of the range. And basically that's all. No changes on the indices for us. No changes, just a follow-up. Commodities. The most relevant one becomes the oil. We want 2 waves down and we won't go long. This is our second wave developing here after the triple cycle we got on the rally before. We got this 1, 2, 3, and we are now in 1, 2. This could be the first level in play. This could be the next one in play. The lower we go, the better it is, because from this area we would be looking for the oil to climb above the trend line. Once it does, that's exactly the moment we are back looking for long. As for now, neutral. Yeah, of course, all the hurricane conditions and geopolitical conditions might go and put the pressure. Definitely, there are let's say this way, there are too many reasons fundamentally why the oil would fly. Technically, these reasons now starts to fit, and we get the levels. We do not have the setups, however, guys. Okay, for long term, I just want to remind you why we are buy, because of the huge cycle we had from weekly. So we are for a 38.2 or even 50, right? But we can go lower, and technically we can even get this oil somewhere here with a bullish divergence before it flies. It's all acceptable, but for long term, according to the weekly cycle, I want only buys, which means I myself am ready to miss the sell opportunities which currently happening, because I believe that once the buys take place, they will be much more correct. So for that to happen, we do need to go above the trend line again and start to regain the momentum. As long as it did not happen, we cannot trade it. And our levels to watch would be here, if it managed to stop, here, or lower. All that are potential possible levers for the oil. But yes, I am only after buys for the very long term, of course. Okay, so that means, by the way, yes, I am ready to skip and miss the sell, and it's currently paying pretty well. But you know, we cannot be everywhere. We need to choose direction. We need to make our preferences. My preferences, and I might be wrong, but my preferences are to look for the buys when they happen. And as per commodities in general, for long term, not for short term, but for long term, I prefer to be only with buys. Only with buys, unless there are some crazy setups that just cannot say not to. But generally, for long term, I do prefer only longs on commodities because it's, well, how to say that, safer. Next one, gold and silver. Gold. Remember our previous direction, guys, from the previous week? We are only after buys as long as we don't have lower lows and convergences. And here we are. That was the low we wanted to see being broken. It was not. And right now, two waves correction, breakouts, and continuation. Gold is the living proof currently that we must have an invalidation plan to change direction. Our plan was, if we managed to break below this low, to create a convergence, and as long as it didn't, the trend is our friend. Where the gold climbs to, that's the next question, right? And our goal from previous week was here. That's the first duplication around 1310, 1320. This is our zone. Okay, this is also 161.8 here. It's slightly higher, 1330. So I believe we are climbing right there. Here, that's our zone. There is a good chance if we break through, we are going for full expansion towards 1370 to be the big cycle here. Okay, this one. Duplication of this monster cycle. That's right here, 1370 zone. Okay, so we stay long as we don't have two false breaks down and convergence, or triple cycle down and two waves correction. As long as it didn't happen, we don't have any reason to go for sell. Silver, IMO just following the gold, and the same view. My view does not change here. I believe we are going higher. We don't have any reason to get out. We didn't from the previous week, so that's why we stay long. And that's our levels, guys. First level, very important level, 1770 zone. Next one, 1850, 1870 here. We stay long as long as we don't have invalidation. Our invalidation, two false break with bearish convergence. Bearish convergence, we invalidate the longs. Currently, we stay long. Okay, we remain on that direction for us. Sugar. Where is our sugar? Sugar came in play on the second scenario we've had. Our view was here, this short range, right? And as long as we hold here, we would expect it to climb, and it does. So we stay bullish. But such setups I prefer only for investments, because we are talking here about long-term cycles. And also, we have to keep in mind that there is a good chance that it was just kind of range before we get one more low. So the momentum here does not gain quick rallies. It's kind of a warning sign. And for those of you who do trade sugar, keep in mind that every warning sign you get against, which means bearish divergence, is good enough to cash out the longs. As for stocks, I prefer normally not to get anything on the non-farm payrolls weeks with the stocks. The only one that I really want to get in play with was and remained the Deutsche Bank that we have from previous week. You can see how sweet it's slowing down the current bearish momentum. That's the levels we want to trade. We want to see the stock really bouncing for us and making the break of trend line, right? And then we want to see these scenarios for longs. If not from this area, our next area would be here around 1230. That's where we're going to look for the longs there. Technically, it looks one of the best opportunities, especially when we include the long-term cycles. We had a special here. One, big two, three, and two waves down correction. And that's why I believe this one is one of the good ones to look for the buys. I like that. We had few from previous week. They did not change and they do not move. It was AXA, Siemens, and L'Oreal. They all still get in the same zone. So they don't change. We have it from the report, so I don't have any update on them either. But I also don't have anything new because I prefer on non-farm payrolls weeks stay away from the US session market and also end of the month, which means much more room for speculations. Ganesh, what is expectation of US payroll? Well, the expectations are a bit lower than the $200,000, 200,000 new jobs, but it's just expectation. We never ever have a clue what could happen there. Many times, even you expect something, one impact from the market to the data to be released, and then exactly the opposite happen. During the event, as much as it's tempting to trade it, and as much as it's seducing to jump in, that's not tradable moments. And my suggestion was and always will remain, guys, we all are human beings, which means we have to admit that, and which means have yourself one leaving account where you play only by the rules, and have yourself one small account where you allow yourself to go and bet, gamble. That might pay well because if you trade with a direction just a bit more aggressive, that's what I call an extra income. Surprisingly, sometimes it pays like crazy, sometimes you lose, but this is your place to take out of your aggression. But the main account, the one that you really want to trade, that's where you have to put and play only by the rules. Only by the rules. And this way, you allow yourself a real chance to grow. Guys, thanks a lot for being here. I wish you a wonderful day and a wonderful week. Again, a reminder, tomorrow we don't have a session with myself. So I'll see you again on Wednesday. Okay? Thanks for your time. Really appreciate you being here. And I'm going to work on the report and send you everything summarized with the validation long-term targets. Thank you for being here, guys. See you on Wednesday and in Telegram groups. Bye for now.